I'm curious to hear your thoughts about a 50-year mortgage.
I think that's ridiculous. I don't like somebody just putting money down and then having a loan for it. So I think that's ridiculous.
I've said on another episode, there's going to be a lot of headstones that say I'm waiting for rates to come down.
Yeah.
Like died waiting for rates to come down.
Yeah.
It's not going to happen.
I'm
But I
under
do
contract
think
on a home at 6% right now
there you go.
because I'm in the same boat. Like I don't think that we'll see low fives anytime soon.
I don't think so either. But I will say I think if rates push under 6, I bet that's a sticking point in a lot of people's head right now. Like if I can get a rate in the 5s, I'm gonna do it. And that's if you can fix the demand thing, you're gonna see an increase in prices. Like you're gonna see. I hope it doesn't become 2020 again, but you're gonna see some things. You're gonna see some fireworks. Like you're gonna see probably over 5%. I'd say between 5 and 10% appreciation.
Mm-hmm. I think half of it's the interest rates if they do dip, if there is going to be demand, and then the other half that I'm paying very close attention to is money printing by the Fed. Like if any policy is going to change, or like if the administration feels the need to do anything like that, because that's what triggered this to begin with was
there's too much money.
Too much money.
Yeah.
And we could.
Well, it's a combination of low rates plus money printing. You've got, it leads to, they've been trying to curb inflation, which is part of why the Fed hasn't been doing that. But yeah, if they go back to it, we're gonna be right back in 2020, which is, I guess, like if you're trying to get in, you're trying to own a home, like it will be your time to strike, but overall it's gonna create more problems. It's gonna make everything more expensive.
We have no idea what's gonna happen.
Yeah.
And then
in short, we no one knows.
No idea.
No one knows.
No.
So while we still have plenty of time, speaking of this administration, I'm curious to hear your thoughts about a 50-year mortgage.
I have not. So I really have not read anything on it. I haven't listened to anything on it. I think there'd probably be use case scenarios. First, like I don't like somebody just putting money down and then having a loan for 50 years. I think that's ridiculous. So you're going to be paying interest for. I haven't looked at an amortization calculator for a 50-year mortgage, but it must be pretty wild. But I think there could be a use case scenario if like you're going to pay off. If you plan to pay off the loan sooner rather than later, maybe you just go with a 50-year because you need to because you want lower payments, and then you just pay it off. I'm sure there's some use case scenario to it.
Yeah, your minimum payment stays low. I can see where it will make sense for some investors. So it's like, hey, like if I could have a $2,000 a month payment instead of $2,500, and I know I can rent this for $2,300, maybe. And it's like, let's say it's like a newer build, like your maintenance and whatnot's going to be low. It's like that's the difference between cash flow negative and cash flow positive. So it's like, let me just take this, and then if I have extra cash lying around, I'll attack the principal with it. That's where I think of a mortgage, like, 'cause it doesn't matter if it's a 50 or a 30-year mortgage. Like, it's debt is debt, and now that's how an investor would see it. If you're a home buyer, like, and you're just going to pay the payment. You're not going to be put in a position where I've got extra cash lying around sometimes to pay down the debt, or I don't want to refi it like within a few years. Then don't get a 50-year, get a 30. Like you could probably, well, and this is where we've brought this up before, and it's like for a market like Indianapolis, I think there's a lot of people that think that they would struggle to qualify to buy a home, but then they actually speak to a lender, and it's like, no, you can qualify, and here's a 30-year mortgage, and you could buy a home that's better than your apartment right now. So like if that's already you, do that. Don't get a 50 just so you can save a couple $100 a month on your mortgage, because like you don't even need to look at the amortization schedule of a 50 to know that it's worse. It's still going to have that same curve of the, the principal versus interest and the amount you're paying towards principal. In the same goes for a 30, but like if you're on a 30, those first few years, interest is like front loaded. So it's like you're paying so little money, but in a 50, it's even less money that like you're going to be 5 years into that mortgage, and it started off as a principal balance of $300,000. 5 years in, you're going to owe $299.
Yeah, it's not going to make.
I don't know if that's exactly right. That's math, but
I guess the one thing to like think about for homeowners is that they've seen, like I'm still hearing a lot of videos talking about the past 5-year percent price increase. Who knows, maybe to convince people to buy a home. And like if you look at it like a 5-year past price increase, it's a lot, like over 50% price increase. But like if as of right now going forward, it's a lot less. So like if somebody was to buy a place and then think they need to sell it in 3 years, like if you're gonna buy a place right now, sell it in 3 years, if that's like a plan, then you have a 50-year mortgage note to where you're not going into you're not making any huge equity payments. Then 3 years time, probably 100% of the time going to take a loss unless appreciation starts to go crazy. So
again, there's levers the Fed can pull with interest. Like it could happen, but also why should it? Like you just said it, 5 years equating to 50% appreciation. Why does that? No one wants that to happen again. I mean, I own property and that would be great for me, but like
it sounds good. It's not.
It's not.
Like it sounds.
That means
fantastic.
things are bad. That means things are bad. It means the price of eggs is like $47. It means that everything's more expensive. You can check out our full library of episodes wherever you get your podcasts.